Hey there, this is Rob. I wanted to go over and look at how Bigfoot did for about a week or so. This is our 2-tick trend bar, and so I've got this set up looking for an 8-tick target and an 8-tick stop. So that means that we're going to need to have 4 candles of follow through in order to hit target, and that's usually not too hard to do. This is a Monday morning, and so we had a little bit of a push to the downside. This big kind of move through here. This didn't trigger anything on our indicators. And then as the morning progressed, we've got the U.S. market open that occurred, and this is about 10 minutes after. So we caught a couple shorts in here. Again, one of those swings, and then we got into this kind of choppy section in here. This is one that got stopped to the tick, so if you had a little bit bigger stop, maybe a 10-tick stop, you could hit your 4 ticks on that, and then it caught another winner. So at this point, you know, this is all the activity that you'd be looking for typically in a day, because on a 5-tick, $5 a tick market, that means that you're up pretty close to 50 ticks at that point. So as the day progressed, we had this trend that set up to the long side, and that's really when it's pretty easy to make targets when a trend is established, and then when things tighten up, then it of course is more difficult. This is right around 10:30 in the morning. Whenever you see those purple stripes, that means that you're getting trades to fire within, I think it's set up for about 2 minutes between trades, just so you don't get any overfills or multiple orders happening at the same point. And so it doesn't take those trades, it just identifies them. And then we got this downside push to the short side. It did quite well on this day. We got into this choppy section. So the way that looks on our big chart that we look at in the room, this is our 8-tick chart that we look at. We had this move to the upside, the sideways consolidation, the big plunge short, and then more consolidation down here with a couple of moves that were pretty decent. But things do tighten up after these big wide swings, and they're preparing for their next move. So I was able to do quite well on that day. Okay, this is the next day. This is a Tuesday. So the market started out with a nice little push to the upside. You can see that we had a couple of those purple entry identifiers that triggered, meaning that they're very quick after the U.S. market opened. So we had some movement, a little bit of consolidation in here. It was able to put up some pretty good ticks at that point. As far as making ticks in here, still a little bit hectic on the market, and then we're able to regain a few winners in a row and get back into that. You know, at this point, it's up about 50 ticks. So for most people, they would obviously be done on the day. We did have some follow through to the upside, a little bit more of consolidation, and it was able to it was up about 32 ticks on the day. So would have been better to turn it off a little bit earlier, and the way that looked on our big chart was like this. So we had a little bit of a movement to the upside, back down around our reversal band, which usually holds pretty well, and then you can see when we had some consolidation in here, some more consolidation in the afternoon. So that's why you kind of want to get in and get done with your trading, and then try to avoid the consolidated times, because you're going to get some trends that are going to establish themselves, and then when those kind of dry up, then it can be a little bit trickier to hit target. Okay, this is the Wednesday. Started out with a push to the upside that played out pretty nicely. It was able to capture a lot of these moves in the long side push, and so it got up pretty quickly into that over 20 tick range, which means that well, 20 ticks, I'm sorry, I say 20 ticks, $200 range, which means for a $5 tick market, that puts you around that 40 tick range. So I was able to do pretty nicely, hit that level a few times, and then in terms of what it did in the afternoon, gave up a little bit of it in consolidation as things tightened up. Having a look at our big chart at that point, this is some early morning consolidation. This is a pretty nice trend that established itself into the U.S. market open, stalls out right at the reversal band. So we always expect the market to come back to our support level. And so we had a big push short. Where we're interested is when we get our midline cross, and so that's part of this leg down in here. And then as far as the consolidation, once we got out at support, they had a brief little push to the upside and then another plunge short, and we care about, again, these moves through our midline. So then we had good follow through all the way up to the reversal band the next morning. Okay, this is the 6th. This is a Friday. We started out the morning, we were able to put up some ticks, got into that $100 range, which means that it was able to do about 20 ticks at that point. And then the rest of the day was kind of a challenge. We got back up into the $100 range on this move here, and then we got into this sideways consolidation, and then a leg to the upside that we were able to stay pretty close to flat on the day, but really that was about it. Got briefly into profit in the afternoon, and then things just kind of flattened out. So Fridays can be a little bit of a challenge. Mondays are tricky as well, but it was able to at least hit a nice 20 tick target if that's what you're after. And then speaking of Mondays, here's Monday, which was yesterday. As far as what we had to the downside initially, this is one that went right to target but didn't fill. Then we had another one that got a little bit into profit, couldn't hit target on that. And then we started doing a little bit better with a couple of winners in a row. Then we got into some sideways chop. It was lucky enough to hit target on some of that and get into the at that point up about 34 ticks, and then into the afternoon got into the 40 tick range and ended up a little bit over 40 ticks on the day. So it did pretty well. So that's all doing a setup where we're looking for 8 ticks a trade with an 8 tick stop. And I've had some people that like to do the runner scenario, which I normally recommend doing on the 1 tick. So we'll look at all of those days on a 1 tick now. Okay, this is the same last Monday on the 1 tick, and so basically what that means is that when we have these pushes, these crosses on targeter with our agreement with our larger time frame targeter, that means that we're going to get into these runner scenarios, but then you're going to have your reversal candle, and typically that means that you're going to be giving up about 6 ticks or so when these reverse on you. So that means that if you have just a straightforward 6 tick target, which can hit pretty easily, that just means we need 6 candles to follow through, since this is a 1 tick chart. That means that you would need to have at least 12 candles or 12 ticks of follow through, because if you give up 6 ticks on the turn, then to get the same 6 ticks you're going to need additional follow through. But on the large moves, obviously you'll want to take those runners and try to see if you can hit your target that way, and there'll be some big trades. We got into the US market open, or a little bit before, and it hit a couple of trades, got up a few ticks, and then had a couple of stops in here. Then we had this big wild runner that was able to put up pretty close to 40 ticks on that push, I guess about 36 or 38. And then we had another real big move after that. So those are definitely the ones that are going to make you happy. And then as you get into some tight consolidation, then you can get chopped up because you're giving up 6 ticks that you could otherwise hit often. So at that point we're up substantially on the day, and then we had a few more of these real nice moves, and these kinds of days are going to be pretty few and far between. I would not recommend having a whatever that is, 120 tick target or something on the day. As we got into the afternoon, we had some more of these nice runners, and then it's up in that $700 range. And I think it ended up pretty high in the day. We had some more of these nice moves, and yeah, we got into the pretty close to $900 range, which is you're not going to see many days like that. So this can be a very good setup some days, but I definitely wouldn't recommend shooting for the stars every day with it. Anyway, and it ended up very big on the day, and we'll see how the rest of the week played out. Okay, this is the Tuesday. So we started out with a pretty nice trend to the upside. Some of these almost triggered, didn't quite, just based on the depth of the retrace. So this was able to get into the, well, I don't know how high it went. Looks like it got pretty close to the $200 range a few times, which means that it got 40 ticks or better. And then let's see where it ended up on the day. Yeah, just 80 bucks. So that means about what, 16 ticks on the day. So some of these tighter moves are the ones that we're talking about, where you could hit a smaller target pretty easily, but looking for runners on them did not pan out. So let's see what the next day looks like. Okay, this is Thursday, so we started out with pretty nice move to the upside, got into the 20 tick range by the US market open, just in that quick little 20 something minutes. And as far as what it was able to do later in the day, I guess it hit a couple of nice moves after that. And then I believe this day gave it up as we got into the afternoon. We had, I guess, about 22 ticks there. Got into some chop in this area. This is heading into lunchtime, which is typically not very good. And then got chopped around in some sideways consolidation in the afternoon. Okay, this is the Friday. Had the first move, just a nice move like that. I don't know how high it got. Looks like it got just shy of $100 on that move, and that's pretty nice on a $5 market. Then we got chopped with a couple of small losers, and we were back around flat. That's about 10 minutes after the U.S. market open. And then this move is a very nice one. This is about 18 minutes after the U.S. market opened, and that puts you in very nice positive territory. So then we had a trend establish itself to the upside, and we were able to, at that point, get into the 48 tick range, so that would definitely be well beyond a typical target. Then we had some moves to the downside. I guess that one got into, we're right at about 100 ticks. So these nice runners, whenever you can grab them, definitely will put a smile on your face. And this is getting out using our hook, which means that we have a hook on our indicator. So all of these little hooks is telling us when to get out, and unfortunately we can't have the hook a candle prior. It's just not going to happen. If it could, then we could get every one of these moves and get out perfectly, but that's a little bit beyond the capabilities of these candles. So having a look at our indicator setup, we're just using a fast targeter to enter, a slower targeter as our filter. We've got it set up with just the trend stuff. This is the same on both of the charts. We are using an entry filter, and that's going to be your band down here. We've got it set up for trading times, and I know this is confusing for some people. If you wanted to use a news gap, so if, say, this is kind of set up for crude oil, I don't have a news gap going on with the NASDAQ because you typically don't need one except maybe FOMC day, but that's normally a day that maybe trade a one tick or not trade at all. But FOMC days can be a bit of a struggle because the markets typically don't move, and then they go haywire when the news comes out. So you'll do your filter on. This will turn it on. I've got it 905. And then when you're getting into the news situation where you want to stay out, then you would have a gap in there, however big gap, 20 minutes, whatever you're looking for. And so you'd have this set up for true and this set up for true if you wanted a news gap. If you're just going to trade all day, then I would turn these two to false and then make it true, and then trade, in this case, from about 9 until 3 in the afternoon. So that's what those time frames look like. If you had this true, and this true, it's going to hit these, the first one, see if that's going to be turned on. Then it'll hit the second one, see when that turns on, then hit the third one. So the third one can actually override the prior two if you have everything set up for true. So I wouldn't run it that way. I would either use 1 and 2 as true, and then you'd make your third one false, since it's going to hit these in order, and then otherwise just make the first two false and the third one true. So some people have a question on that. And then another thing up here, if you have no trades on your chart, just make sure that these aren't all zeros. If you have them all zeros, then you're saying don't turn on for any reason. So ones are on, zeros are off. And now if you want to set it up for runners, just go ahead and make your long profit target and your short profit target nothing. That means run it until you're out. And the way that we're getting out is here. We're saying exit hook on. So the exit hook on is going to get you out at the hook. And so it's either going to hit the hook or it's going to use the stop, and the stop's here. So that's the way that you set it up for runners, and you can use whatever stop that you want. But again, if you're into consolidation and there's no follow through on the moves, then you're going to get stopped at whatever stop loss that you have, because there's not any kind of runner established with that. All right, going back to our charts, so we know that this one got into well, I guess it got into the $500 range, which means 100 ticks, and then lost a little bit in the afternoon, but of course, you know, a banner day really. Okay, and then this is Monday. We started out with some chop, very typical for a Monday for the markets not to decide what direction they want to take initially. So I guess we were down a trade a couple of times, and then established a trend. That's exactly what this setup is looking for. So at that point, I don't know how high it got. Looks like it got into that 24 tick range, and then in the afternoon it was able to hit a nice move just prior to lunch, and then a little bit of a trend in the afternoon with a big runner at about 240 or so, and brought us up into a nice 48 ticks or whatever on the day. So that's just basically the two ways to run it. You can certainly massage your stop and target if you just want to do a static target. Just make sure that your stop and your target are pretty close to each other, within a couple of ticks. So some people want to do just 8 and 8 on a 2 tick, and that's you know what they go for. On the hook scenario, you are probably going to have more stops than winners, but your winners are going to be substantially larger when the trends establish themselves. Okay, if you have any questions, just give me an email at info@Bigfoot Automated Trading, and we will see each other next time. Thanks.